Hello everyone, PS from PSINVESTPLAYS here today. E-commerce companies were on a tear in 2020, but their stocks have lagged markets in 2021. Is this trend going to continue, or we can expect a bigger price movement on the upside in 2021 and in the future? In this video, we're going to look at two stocks in the e-commerce industry where we will understand the business, their financials, review their charts using Elliot wave theory, and see how we can make money. So stick around. I think you'll like what I have in store for you today. The first e-commerce company that we are going to look today is Shopify, ticker SHOP. Shopify has built its company on enabling businesses to launch e-commerce sites. It made its name by offering an e-commerce platform that users find easy to adapt. The platform's ease of use has made it one of the top companies in this niche. As a result of this popularity, the stock price has seen a massive surge over the last 5 years, especially in the past year, 2020, as e-commerce sites were in a high demand as part of efforts to deal with the retail closures. Over 1.7 million businesses now sell on a Shopify platform. Users receive unlimited item postings, 24/7 support, access to sales channels and social media, secure payment options, and many other features. Still, Shopify does not dominate its market. Businesses have dozens of choices when it comes to e-commerce platforms that can help sell their products. WooCommerce holds the largest market share at 26%. Shopify remains a close second at 23%, while Wix and Squarespace also hold a double-digit percentage market share. Now, fortunately for Shopify, it has expanded its competitive moat by serving as more than a mere platform. Shopify Payments, Shopify Shipping, and Shopify Capital helped to make the company into logistical and financial services. However, its competitive edge has become increasingly centered on the Shopify fulfillment network. This network service sorts, packs, and ships orders, giving business owners more time to focus on business management. This makes Shopify a conglomerate, while most of its peers remain pure play tech stocks centered around platforms. But to truly make that competitive moat effective, Shopify will have to invest substantial amounts of capital to build fulfillment centers in its largest markets. The rapid revenue growth and expanding moat had given prospective buyers an added incentive to buy Shopify stock. Shopify stock has moved higher by over 4,000% over the last 5 years, though it has only risen by about 10% in 2021. Concerns about the return of in-store shopping amid a reopening may have given some investors pause. The revenue, gross profit, EBITDA, net income all look excellent for Shopify. Thanks to its rapid revenue growth and expanding competitive moat, Shopify stock should remain a winner long term. But with the stock price growth slowing in recent months, new buyers may want to hold out for a lower entry point for buying in. The PE ratio is likely to rise again if net income doesn't keep pace with revenue growth. That means the stock price might go down. While its growth should continue, it may not occur fast enough to justify a 45 sales multiple. It's very high. But if the stock experiences a significant price pullback, you should take the opportunity to buy in on this growing software as a service operation. This is also indicative in the technical review, where I see short-term price decline in the Shopify stock. So, as I can see in the charts, the bull wave that started in 2016 has completed its first wave, and in this first wave, it has completed its sub 5 cycles or first 5 steps. Now, if we look closely, we seem to be in the second corrective wave. And in this corrective wave, I expect support to be around $927 and the resistance to be around $756. This is the buy zone for Shopify, which means we can expect a 29 to 42% downside in the short term in the 8 to 12 months. Once this corrective cycle is completed, I expect Shopify stock to march higher and reach at least $2,000. My price prediction would be around $2,200, which means we can see a 116 to 165% upside potential in the next 6 to 7 years. If you like this video, don't forget to subscribe, hit the like button, and leave a comment sharing your views. Meli. Meli is the largest multi-line e-commerce player in Latin America, similar to what Amazon is in USA. The business continues to acquire share at a faster and more aggressive rate than the general rate of market growth in Latin America for e-commerce and digital payments. E-commerce in Latin America grew 37% in 2020, during a year in which Meli grew revenues over 73% in 2020, and at an even faster rate in constant currency terms. Estimates put Meli's share of Latin America e-commerce at nearly 30% as a result of strong 2020 gains, a figure which would imply Meli has increased market share by nearly 50% since 2015. This suggests to me that smaller players are losing share to Meli, and this is something that I expect will continue to occur over the next few years. E-commerce and digital payments tend to be winner take most, if not winner take all markets. It's beneficial for all participants, including merchants and consumers, for transaction costs to be lowered, and that's best facilitated on platforms that have the greatest number of consumers and merchants to enable optimal price discovery and for needs to be met the first time, resulting in seamless transactability. What's also noticeable here is that not only is Meli acquiring more market share at the expense of weaker players, but that Meli's revenue growth has also been accelerating over the last 5 quarters. It has increased from Q1. In Q1 2020, it increased from 70% to 158% in the most recent quarter. Significantly, e-commerce and digital payments in Latin America have an increasingly long runway. Meli's own numbers peg e-commerce penetration in the mid to high single digits in 2019, a figure which no doubt increased last year, but which nevertheless speaks to the considerable runway still remaining in the region. Estimates for e-commerce in Latin America are set to triple over the next 5 years, from 64 billion in 2020 to nearly 220 billion in 2026. Meli's commerce revenues, which accounted for nearly two-thirds of net revenues for the quarter at nearly $911 million, grew 188% year over year on a constant currency basis compared to the smaller and emerging fintech business, which increased 117% year over year to $468 million. Payment volume through Mercado Pago, which is a unit within Meli, increased 130% on an foreign currency neutral basis, with payment transactions up 117% year over year. Mercado Credito, Meli's lending and credit portfolio, doubled in size year over year to $576 million, while the asset management business, Mercado Fondo, increased assets under management to $650 million with nearly 16 million users across Latin America. Meli has nearly tripled from its low points during the pandemic. The business has actually worked off all of its 2020 valuation premium and now trades in a valuation range that is more consistent with where it traded at in 2019. Meli's rapid growth of revenue growth combined with a share price that has declined by nearly 30% has resulted in a forward price to sales multiple which has declined over 40%. Meli trades at a relatively undemanding forward price to sales valuation of under 11x sales. Compared to emerging markets peer C Limited SE, which trades at north of 15.5 forward sales. Meli has done a tremendous job leveraging Mercado Pago as a payment vehicle that extends far beyond just captive on platform payment volume. The business has done an admirable job of establishing infrastructure at leading merchant locations including Starbucks, Burger King, 7-Eleven, and McDonald's. A reopening of Latin American economies will enable Meli to continue its acceleration in the mobile point of sale segment as additional in-person transactions come online and further extend its lead here. A reopening in Latin America should also improve the delinquency rate or the bankruptcy rate on Meli's Mercado Credito loan portfolio. Think of Meli as the Amazon of Latin America and a company which is an Amazon and Square of Latin America. It combines those two and brings out a very strong portfolio. Revenue, gross profit, EBITDA, net income have been increasing, the numbers are very encouraging. Now the conclusion for me is that Meli has received a nearly 30% haircut from all-time highs in the recent growth correction. In spite of this, the business continues to grow revenues in excess of 100% in recent quarters, a rate which has been accelerating. This strong growth and price retracement has almost removed the 2020 excess from Meli's valuation. This is also indicative in the technical review, where I see slight short-term price decline, but long-term I'm extremely bullish. As we can see in the chart for Meli, Meli has completed, very similar to Shop, Meli has completed its first grand cycle of Elliot wave, where the first 5 impulse waves are completed. It seems to be in the second corrective wave, and I think the price should be within this range, where the support is $1,247 and resistance is around $995. I would consider this as a buying opportunity when the price falls within this range. Time horizon is around 6 to 8 months. For the long term, where my time horizon is 5 to 6 years, I see Meli stock to reach approximately $2,764, which means a 122% upside potential in long term. Now, let's summarize. For me, both Shop and Meli are winners in the long term. Shop currently seems to be on the expensive side. Meli seems to be on the bargain side. For Shop, short term, I see a 29 to 42% downside, which I consider as a buying zone. And long term, I expect a 116 to 165% upside potential, considering you buy within the time zone. For Meli, the short term pullback is not that big. It's around 10%. It should get over in the next 6 to 8 months. But for long term, which is 5 to 6 years, I expect the stock price to climb as high as 2,700, which should bring us 122% upside. What do you think of this analysis? Leave a comment and let me know. As always, don't forget to subscribe, hit the like button, and share this video with your friends and family. Until then, bye-bye.